This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China has issued the first batch of crude oil import quotas for 2023, mainly to independent refiners, four sources familiar with the matter said on Saturday. The volume issued is about 20 million tons, 146 million barrels. One source said, nearly 3 months earlier than usual, in an attempt to encourage refiners to boost production. China's Ministry of Commerce did not immediately respond to a faxed request for comment. Demand for the quotas will depend on refining economics, said a senior executive with one of the refiners involved.
Oil prices steadied on Monday, recovering from earlier losses, as investors weighed potentially tight supply against economic storm clouds that could foreshadow a global recession and erosion of fuel demand. Brent crude futures for December settlement fell by as much as 1.1% but recovered to being down 17 cents, or 0.2%, at $97.75 a barrel by 13:53 GMT. West Texas Intermediate crude for November delivery declined by as much as 1.1% but was last at $92.62, down 2 cents.
Moving on to the top news in the energy sector.
Germany on Monday said it plans to urgently implement a €96 billion, $93 billion, plan to ease pressure on consumers from surging gas prices as it was warned that the supply situation heading into winter remained tense even with full reserves. Berlin said it supported the Commission's proposals to give households and small and medium-sized businesses a one-off payment worth 1 month's gas bill this year and a mechanism to limit prices from March, and it was working to implement them. The supply situation remains tense despite the filled storage facilities. Michael Vassiliadis, head of trade union IGBCE and one of the Commission experts, told a news briefing, adding that the panel hoped their plan would curb inflation.
The London Stock Exchange has become the first major bourse to set listing rules for companies that finance carbon reduction projects, as part of efforts to grow the market and make it more transparent, its chief executive told Reuters. Demand for carbon offsets, generated through projects such as tree planting or renewable energy, is expected to soar as companies seek to meet net zero emissions goals. As a focus for policymakers, it is likely to be debated at climate talks in Egypt in November, yet the global market for voluntary carbon credits, as opposed to binding commitments to cut emissions by companies and countries, remains largely unregulated. Next, we have the top news in metal markets. Copper prices rose on Monday but Chinese-led demand fears, expectations of further increases to U.S. interest rates, a stronger dollar and rising inventories weighed on sentiment. Stocks of copper in LME-registered warehouses were at 143,775 tons on Friday, up 40% since September 15. However, worries about copper availability in the LME system have resurfaced because of a rise in cancelled warrants, metal earmarked for delivery, to 8.4% of total stocks from 4.8% on Thursday.
Iron ore prices rose on Monday, as portside inventory and top steel producer China shrank during the Golden Week holidays to the lowest since mid-July, indicating strong demand for the steelmaking ingredient. Adding to supply concerns, threats of flooding remained in Australia, China's biggest iron ore supplier, as authorities warned of another intense weather system that could bring more downpours. The most active January iron ore contract on the Dalian Commodity Exchange ended daytime trade 2.2% higher at 739 yuan and 50 fen, $103.93 a ton, after touching 744 yuan and 50 fen earlier in the session, its highest since August 9.
We will now look at the top news in the agricultural sector.
France has released strategic fuel reserves for sugar producers after they warned that a lack of diesel impacting the harvesting of sugar beet could lead to factory stoppages, producer group SNFS said on Monday. Strikes over wages at Total Energies and ExxonMobil refineries have disrupted refining and delivery, leaving a third of French fuel stations running short. The French government said last week that it had tapped its strategic fuel reserves to resupply stations that had run dry. France's largest sugar maker Terrios said last month it had to slow output at some factories after TotalEnergies said it would be unable to supply diesel. It declined to comment on the strategic stock release.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.